What's up, guys? Welcome back to DCA. Today, what we're going to do is talk about Bitcoin and keeping the market cycle in perspective. Okay, but before we get into that, I just want to quickly show you guys the DCA index model for Bitcoin and give you an update. So at 57,000 right now, we're sitting at about 45 on the DCA index. So as you know, if you've been watching the channel, below 50 is a safe place to start DCAing in again. And in fact, I've done that. I started DCAing about a week ago once we got, below 50 for the first time in a couple weeks. When we're below 50, I'm DCAing into Bitcoin and I'm doing so dynamically. In other words, as we descend down this risk model, I'll invest more and more. So, 1x, 1.5x, 2x, etc. Right now, so we're in this 45 zone. So I'm doing my standard 1x dollar cost average level. As we go up, I'll start selling. And, as we go down, I'll start, buying in more, just depending on wherever the market takes us. Okay, so if you don't know what this is a model which helps you identify where markets may be overheated or sort of oversold. So you can see it pretty accurately defines where the top of market cycles occur and also where the bottom of cycles occur. This model is free. You can get it on my Telegram channel, which there will be a link to in the description. And if you guys want to learn more about it, there's many videos on it that I've made so far, and we discuss it in the Telegram channel all the time. So if you're new, check it out. Otherwise, let's get into the video. So we're going to look at Bitcoin from the time that it held its 20-week moving average on April 29th of 2020. This can be considered the official start of the bull run when Bitcoin is able to get above its 20-week moving average and hold it as support. Okay, we're going to look at that and what we've done from then until now and compare it to 2017. And hopefully this is able to help you just keep in mind where we're at in the market cycle. When we get these dips, they're not that big of a deal, and just, how good things are actually going so far. So right now, from April 29th until today on November 21st, 2021, we are up 634%. Bitcoin is, that is. Okay. That's not from the low. That's not from, sometime out here or back in 2019. It's from the time that we got above the 20-week moving average in April, and then we're able to hold it. Okay. So that is how we'll sort of perform this particular analysis. All right. So, you know, we held this 20-week one time in September and October. And we've said many times on the channel, that is what the market needs in order to maintain a healthy flow. We got above, stayed above, and we got really far above, which isn't such a good thing typically for the market because, you know, it's so bloated that it tends to lead to something like this that we saw in May, where when we do finally come down to that 20-week, we crash right through it, which is fine in this case because we've been able to get back above and have held the 20-week as support back in September. Okay, we actually have done it multiple times. We did it in August and September. All right. Well, now the 20-week moving average is moving up, currently sitting at 49, almost 50,000, and we are sitting at 57,000. We've obviously corrected from where we were at, sitting, up at, approaching 69,000, really close to 70,000. We got rejected, which whenever you're hitting some of these larger, price milestones, that can almost be expected. So we got rejected and are heading towards the 20-week moving average. Hitting the 20-week would actually be a healthy thing for the market, as it typically is. So if we were to come down currently, like I said, we're sitting at around 57,000 or so. So that would be approximately, if it was an instantaneous drop, about 15%. But remember, the 20-week moving average is currently, it's trending upwards. If we were to go down towards it, and it took, let's say it took a week or so, or even more, this is going up. You could almost say about $1,000 a week. You could expect maybe at around 50, 51,000 if it took a week or two, if not more, if it took a little bit longer. I think it would be better for the market if we were able to come down to this 20-week and use it as support. Now, if it goes through, that could be trouble. So we did not do any of that here back in 2020 and early 2021, which is why I believe we fell right through when we finally did come down to it. All right. So the thing I want to show you though is, recall we're up 634% right now, 573 days into this market cycle. Let's go look at Bitcoin when it got above its 20 week in 2015 during that particular bull run. So the bull run that went from 2015 all the way until the end of 2017. Look how many times we used this as support. Now, critically, 575 days into the market cycle, which recall that's exactly where we are right now. It's 575 days. We were behind. We were behind where we were at in this market cycle so far. Okay, we were only up about 579% at that point. All right. So, that's my whole point here is, I'm not implying that we're going to, go up nearly 8,000% for Bitcoin. In fact, I think that's absurd because that would be, if we just look here, that would put us, at nearly $750,000 of Bitcoin. That's not going to happen. Okay. So I don't mean to imply that that is what, is in store for us, because I quite frankly don't believe it is for a second. People get down on Bitcoin like it's not doing anything. But in fact, if you were down here, we, in the same amount of time, we're actually ahead of where we were at that time. Now, with that said, we did quickly several 100% more within the next few days, because this is when it really started getting parabolic, was right at around 575 days like we're sitting at right now. It's just to kind of keep things in perspective. When you think things are bad, just remember where we came from and look at these past cycles. We had big corrections here all over the place. I mean, look at these moves back to the 20 week. So, talked about these the other night, but just to quickly look at them again, that's 34%. This one here was 28%. Right before we got to 575 days, that one was 40%. Okay. Or sorry, it was right after. But there were multiple large corrections on the order of, 20, 30, 40% or more. 30% correction here. And they noticed they all went to the 20 week and bounced off of it and used it as support. So that's why I am saying I believe that if we can come down to this 20 week, the bulls are able to hold the 20 week, then the market cycle will continue. And I think things look good. Now, remember the market dynamics are quite different now than they were back in 2017. You have a lot of options trading, the ETFs, futures market. So, there are many more players in the game. And if you thought people were manipulating it before, well, there's real big money in the market now. And I can assure you, they're probably doing the same thing. So, we can never be certain exactly how this is going to play out. We could go below the 20 week again as, a manipulation of the market to drive it below the 20 week to make the retail market think that the market cycle is over, when in fact they're just running it down so, the bigger institutions can enter the market. Because I assure you, a lot of them want to, but they probably don't want to get in at 67,000. Okay. So it's just something to think about, and something, like I said, just keep where we're at in perspective before, you start getting down on the market that we've just kind of going sideways for some time now. So things are still looking good. I think this is a healthy move as long as we're able to move off of it. And, like I've said many times before, this 20 week thing doesn't apply just to Bitcoin. Go look at NASDAQ or the S&P and look at a bull market. It bounces off the 20 week. It happens all the time. So this isn't a factor that's, somehow unique to Bitcoin. Just something to watch for, guys. That's it for this one. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.